Good morning, traders. This is Juan Maldonado from the Elliott Wave Street, and it's a pleasure to start the weekend, the month, with some of our trading plans, our Elliott Wave counts for this month of August. We are going to check some markets. Please read the disclaimer on ElliottWaveStreet.com, and let's start. Here we have the euro, which has been going down after reaching a high last week of the 919. We have been bullish for the last weeks on the euro, and this is a great moment to think what is going on, right? So the main thing is that seems that we are in a corrective wave, sharp one. It's a sharp corrective. I don't think that this is the top of the market. I think we are going to have the corrective and then the leg up. But the question is when is going to end the corrective wave? Should we buy the euro because we think the wave 4 it's done right now because the price is going down? No, don't do it like that. It's not the right way to trade the markets. First of all, we need to have the advantage of using Elliott Wave. Clearly is going to give us an advantage. And secondly, we need to plan the trade. So look, it's rejecting the 38.2%. So here I'm going to start finding like some sort of double bottom or a moving average crossover on the lower time frames, whatever, with my strategy to find the buy trade. Once I have a market reversal here or lower, I don't know that yet because I don't have the signal yet, I'm going to buy the euro. I'm going to share that with my members in the Telegram channel that you can have access if you take the membership, and the target is going to be the previous high. Once we have the reversal in progress. Let's have a look now at another favorite, that is the dollar CAD. This one is in my hot list because it seems that the dollar CAD wants to go up here to climb to the previous high, to the 134.60. And once we are there, if we have the price losing momentum, I'm going short, and the target is going to be the previous low. I want to capture this distance. So clearly this trade for today, maybe a little bit tomorrow, it's a matter of patience to find the top, to find the corrective, to sell dollar CAD, and to capture some nice points from the high all the way down to the low. Let's have a look at the S&P. The S&P on the weekly chart, let me hide some of the waves. If you have been seeing my work, I am bullish since here. Before that, I was thinking that the S&P was going to make a lower low. But since here, I discovered that the S&P needs to make a higher high. And I have been buying successfully the S&P on every retrace. So my plan is to see the S&P coming up here. But look, there is something very interesting that I was explaining this morning to my members in the daily video. And is this candle. Do you see that candle right there? The one with the long tail. That one is confusing because if we are in the price going up, it tests resistance and leaves a rejection. Most traders will say, oh, that's a sell, right? That's a sell. I'm going short. I'm going to sell the S&P. I believe that's a mistake because also we have, additional to that candle, something bigger, and it's the trend. The trend is going up. And when we have a trend, the trend is likely to continue. So sometimes you need to add that context. It's better to buy when we have a retrace, when we have a retrace, when we have a retrace, when we have a retrace. Maybe we have another one here. That's better. Buying in the bullish trend when you have a discount, rather than trying to sell at the tops. because after the fact, you can very easily say, oh, that's easy, trading is so easy. I'll sell here, I sell here. And are you going to sell here again? Or here? Have you been selling and selling and selling and having a lot of losses? Of course. Because that's too complex to take the one that actually reverse. It's easier to take the after retrace trade to buy with and go with the direction. Makes more sense. I feel so happy about my S&P analysis because we are getting closer to the target of the previous high. I strongly believe we are going there. The next thing is something that I'm not sure yet. I need to check the price action once we're there, is if it's going to cross and is going to sustain above and it's going to continue, or if we are going to have a retrace or maybe some sideways price action period. I don't know that yet. But what I know with a high probability, according to my wave count, is that we are going to the 3,400 area. Now, let's have a look at the lower time frames, because the story is a little bit different on the lower time frames. It's quite sideways. So here is my trading plan that I want to share with you. Here we have a resistance, resistance, right? Resistance. There we go. So if this is right, if it's true that the S&P is ready to give us the leg up, this could be the last opportunity to get into the trend. So what I'm going to do, I have been buying and buying the S&P on every dip, but here will be one interesting because, and I take my profits, I close my trade. I don't have on the S&P like longer term trades. I have one on gold that I took at the 1,800 area, and I shared that one with my members. That was a beautiful trade, and I have a fraction of that trade open. But anyway, on the S&P, I'm more fast. Here, I'm looking for the 3-wave sequence, and that could be the last one to trigger the trade and jump into the wave 3. That I'm looking for that with a tiny risk. Now, if the S&P falls deeper here inside, if it moves something like this here inside, then we are not going to have the wave 3 yet, of course, and we are going to have something deeper. So here comes the tricky part, because the risk is that show us a nice signal to buy, and then if we start the trade and then it goes down, I will close the trade immediately, with a small loss, because I know that if the S&P wants to give me the wave 3, that wave 3 to give us 50, 100 points, is going to happen fast. I know that. If it starts taking too much time, if it starts going here inside, I will scalp on lower time frames, but I will forget about this trade yet. I think eventually will happen, but this will not be the right opportunity. All right? Make sense? Fantastic traders. This week I want to recommend to you the introduction to the Elliott wave theory that you can find on ElliottWaveStreet.com. Visit ElliottWaveStreet.com. It's right here. Of course, it's going to be today a little bit lower here on the feed because I'm going to post this video here on top. And I want to invite you to take the membership or take our fantastic Elliott Wave course. For the membership, click here and you will see all the details. We have the membership for the Forex trader, for the stocks trader, and the full access. Here you can read all the details and take your first month trial. And don't forget to subscribe to this YouTube channel so you can have all the updates. Once I post analysis, once I post the free training, whatever, you will have all the notifications if you sign up here on YouTube. All right, traders, as always, it's a pleasure to start the week with some of our wave counts. Please have a fantastic trading week, and I'll see you soon. Take care. Bye-bye.